So good evening to all our mentorship traders. End of a week. We are on the 12th of March 2021, Friday evening, 9 p.m. Indian Standard Time. As always, we're going to talk about the markets for the first few minutes. And then as planned, we'll talk about in details about mutual funds and what kind of funds schemes you should have in your portfolio. An ideal fund structure. Nevertheless, let's come and talk about the markets first. Nifty, quite a surprise today, just when we thought that it has taken out 15K yet again on the upside, and it's holding well with small gains, but steady gains. We got a gap up today, went as high as close to that 15,375, close to that 15,400 mark, and reacted quite sharply. If I negate this, this particular dramatic day that we had on 24th of Feb with the terminals going down, and we had an extended trading hours in the evening. If I discount this unnatural upper shadow, then we can clearly see that 15,400, 370, 400 is exactly the level from where the index came off quite sharply twice, once on the 16th of Feb, and now we have on the 12th of March. Though we did manage to see some bounce back from the day's low, but if you look at the 15-minute time frame chart, you will see that it was quite a disappointing close for the index. All that it did was open positive and then throughout sold off, with majority of the blows coming in the afternoon post at 1:30, 2 o'clock. Now, what can we expect going forward? First and foremost, the underlying trend is still up, though it has gone volatile the last close to 1 month's time, because uptrends and then downtrends again. So it has been volatile, but it's still holding well. We have a bearish engulfing pattern, which everyone who has read about Japanese candlesticks can clearly see this. Not a very strong uptrend before this, but the important thing is we're still trading within this rising red channel, and the lower border comes as an important level to note for. It's holding above the 15K mark. This is a psychological win for the bulls, but what can we expect ahead? Now, this is the 75-minute time frame, the 75-minute chart of Nifty futures, and what we can see is multiple layers of supports. First is the 14,950 15K mark. That's exactly where we bounce back from in today's trade. That's the first level. We've got a chunk of volumes happening here. We can see that from the volume profile. The previous lows, which held really well, this close to that 14,600, 750. This was lows twice. This was highs twice. So this is quite an interesting and important level. And this zone, 600, 750 zone, actually confluences really well with the lower border of this rising channel. So we might get a chance to see the Nifty down at these levels, and the Nifty will probably try its best to hold. Below that, I think it's going to be a little tricky, in the sense that we can probably head towards some correction. What to do? Well, volatility is definitely there. We cannot argue that. And in such cases, strategically trading a little lower quantities, smaller bet sizes, and be a little careful on either side of the market wouldn't hurt that bad. So I would suggest to be a little careful. Let's see on Monday, the first half of next week, how it behaves after the sharp fall. Does it manage to give us a gutsy bounce back or a follow through? I think a psychological level definitely is 15K. There is no doubt about that. And a close below that definitely raises the chance of 14,600, 750 on the downside. Now, before I move on to the sectors, if I consider this to be the first cut, that is the first fall, and if this has to happen, I'm just contemplating, we can have a short-term bounce back and then the fall. We can have this kind of a zigzag move down. It may not come, it can gap down and fall, and the markets can do whatever it feels like, but I'm just contemplating, I'm just thinking and anticipating what kind of move I can expect. Bottom line is, if we get a short-term bounce back early next week, and if it fails to hold, then we can have some serious price weakness coming in. We'll keep a very close watch on today's low, which is 14,960 for the Nifty future. And I would suggest stay careful, stay cautious. Do not look to trade very aggressively on either side of the market because the bounce backs can be really, really sharp. Let's take a look at the weekly performances using the stock charts platform here. I'm going to quickly reduce this to 1 week. Yeah. And let's sort it out with some gains coming in from IT and small caps. Then a 1% move from CNX financials. Rest of them were flat. And on the downside, we have the real estate, auto, PSU banks, media, FMCG, consumption, and the rest of them are more or less. Essentially, most of the sectors, like the index, gave away the early gains of the week. So most of them you will see is flat to negative and flat to positive. The only takeaways on the either side of the spectrum is the IT and real estate. I like to take a look at IT with a larger tail, close to 3 months, which is 12 weeks. I'll fit it here. And taking a look at the tails, we have IT, which is slowly trying to pick up momentum in its weakening quadrant. Okay. In the positive quadrant, we still have PSU Bank, strong outperformance. Momentum is also strong. Stocks like SBI, we should look to buy on a dip. Small caps moves from weakening to leading. This is such a case. We have an example where it did not go from weakening to lagging. So is the mid caps holding there. Private sector enterprises, public sector enterprises, I'm sorry, is picking up momentum and strength. Auto is also picking up momentum. This is the RRG charts, which are suggesting the sectoral flows. Overall, I think if you look at the way the tails are, I think PSU banks definitely stands out, and we can continue to look at stocks like Bank of Baroda and SBI to be bought for the short-term bounce backs. Weakening, pharma is still weak. FMCG and consumption has gone down there. Again, it did not go to from improving to leading, and media and MNC is there. Banks, now Bank Nifty, as I can see here, is losing momentum. This kind of a situation essentially can lead to a top out in the market. To understand this, let's quickly take a look at the sectoral indices. What I'm trying to suggest is, what I'm trying to figure out is, are the sectoral charts suggesting any kind of top out? So we'll see that. So Bank Nifty, we can see there is definitely a congestion here, and we can clearly see that this is what is holding it up. Auto, similar kind of a story. We can very clearly see that it's bouncing back from a decent zone of supports. Consumption has anyways moved into a downtrend. You'll find the 1334 moving averages have sloped down. That's not the case with most of the sectors. Energy is holding really good. We don't see any such movement. So energy is one sector to keep yourself on the bullish bias. Again, financial services, very clear. FMCG, like the consumption, has moved into a downtrend. So both of them are weak. IT did give us a bounce back, but its supports are quite on the lower side. We've got some resistances coming in here. So I think IT is going to stay range bound. Media is anyways very, very clearly range bound. You can see this here. Metal, okay, wouldn't say that this is going to be very steep, so let's not draw this. But metals are also fairly strong, so no problem with that. Mid cap, small caps are doing good. Pharma is another sector which has moved into a downtrend, 1334 rolling down with consumption and pharma and FMCG. PSU Bank enters the 1334 zone. Real estate, again, we can see a bit of support, short-term support. Small cap and mid cap, extremely strong indices. Fin Nifty is the new one, and then we have Nifty and private banks. Okay, what we did right now in this exercise were to find out few sectors. Now, private banks, you can see this. Of course, it will match to a lot of degree with Bank Nifty and auto. Few sectors are looking little tricky, vulnerable for a trend reversal. If these sectors reverse, of course, we're looking at some damage. So we'll keep a close watch on auto, banks, especially banking. Consumption, FMCG and pharma is anyways rolled down, so we're not expecting much support from there. From the bullish side, I think we should stay bullish in energy stocks. Reliance comes here, definitely. Small and mid caps. So it's going to be a stock specific market going forward. Themes. So finance maps with the behavior that we saw in private sector and bank Nifty. So to settle this discussion, 15K psychological level for the Nifty. Let's wait out the first half of next week and let's try and figure out if the market has actually decided to find its direction. If it weakens, if it leads to a trend reversal and follow through sell off close to 14,600, go and short or go bearish on the banks, the bank Nifty, the private sector banks, etc. It will probably continue to stay as a stock specific market where small caps and mid caps can continue to show some relative strength. Energy can show some strength. IT is range bound, so it can support the market. FMCG, pharma, and consumption are not looking that good. They're still in a downtrend. So it's going to be a very interesting market. It has led to quite a few multiple trend reversals recently, and I think that volatility will definitely stay. So stay cautious, keep your trades as short term as possible, and please use stop losses if you're trading in the derivatives segment. All right, I'll end here with our market analysis, and let's straight away go and talk about how to create a proper portfolio of mutual funds.